the US has a large debt maturity wall that's coming up this year. So nearly $3 trillion of the US debt is expected to hit maturity in 2025. Janet Yellen, the previous US Secretary of Treasury, has been kicking the can down the road by issuing short-term debt and using that liquidity to support the government. And that debt, because it's all under 1 year in maturity, is quickly running up. So that debt needs to be paid back. And the current US Secretary of Treasury, Scott Bessent, needs to refinance this debt, nearly $3 trillion just for 2025, but there's going to be a lot more in 2026. All of these short-term debt needs to be refinanced using long-term Treasury bonds. And in order to do that, there's a big problem because, well, nobody really wants to buy bonds right now. So what's going to happen? Who is going to buy these? They could use the current liquidity that they have, but as we have seen with, the TGA account and the reverse repo purchase facility, like nothing's really there anymore. It's not nearly enough to support all of this. The last buyer of resort is the US Federal Reserve with their balance sheet. So that's why by Q4 of this year, when all of this debt is maturing and needs to be refinanced, more liquidity will be needed. That's another impending clock that's pushing the Fed ever more tight, and they will need to act. They cannot keep doing QT forever. To follow my Bitcoin trades, go to virtualbacon.com for a copy trading tutorial.